So now you will see here that we have so many accounting entries. So you have seen the accounting entries when you do the normal good receipt, right? How many accounting entries do we have when we do the normal GR against of any purchase order? BSX, WRX. Okay. Tell
Two,
me
sir.
two.
Generally, we have two.
Which two?
So one will be GRIR offsetting account and one will be vendor account.
No, not the vendor account. One is GRIR and one is inventory.
Sorry, sir. Yes, sir. The vendor account will be invoice. Sorry. Yeah.
Vendor account will come at the invoice. So your
Yeah.
GRIR account and the inventory account would be there. Now here in this transaction, multiple things are happening. You need to understand. So what is happening in this transaction? First things, your raw material inventory is going down. Second thing, your finished goods inventory is going up, right? Raw material inventory is going down, finished good inventory is going up. Third thing, you have taken the subcon services from vendor. Because you have taken the subcon services from vendor, so there should be a GRIR account should get generated that we are liable for this payment. This is our liability generated. We need to pay to the vendor. So normally, when you buy a purchase order, when you buy a raw material, and when you do the GR, there's only two things is happening. Inventory is increasing for your raw material, and your GRIR account is getting generated because the liability is generated, right? But here the three different things is happening. The raw material inventory is going down, finished goods inventory is going up, and subcontractor has also charging us for the services. We need to pay for the subcontractor services. So the three different transactions are happening. For these three different transactions, we would be having a different entries. Okay. Now, first thing, the amount which we have put it into the purchase order. We put that this would be the 10 US dollar. That 10 US dollar is not amount which would be for the material. The 10 US dollar which amount which we put in the PO is amount which we need to pay for the vendor services. Okay, amount that we need to pay for the vendor services. So we have a subcontractor services account which got hit. That is 100 US dollar. And against it, we are having another account which is hitting is GRIR account. These two accounts make sure that your accounting entry is booked, that how much of the subcontractor services you have taken. And this GRIR account will get clear when we will be doing a invoice when posting from the vendor. Okay, so these are the two vendor transactions that we need to pay to the vendor. 100 US dollar, 100 US dollars are there, right? Then another transaction is that finished good inventory is increasing, right? This is the inventory finished good. Finished good inventory is increased. So there is one entry here for the finished good. And then there is another entry here for the COGS goods, cost of goods sold. There's another entry here, which is cost of goods sold. When you produce with the production order also, against the production order, when you do the GR, there also these accounts got hit. Now this purchase order is acting as a production order. It's increasing our finished goods stock. But when you do the GR against the production order, there also your cost of goods sold account got hit, and your inventory of FG or SFG, those accounts got hit. So these two accounts are for your finished good inventory. Finished good inventory is hitting, cost of goods sold account got hit, and your inventory finished good account got hit. Two accounts got hit. And the one which I mentioned in the black, this is for your vendor. This is for your vendor payment which got hit. Then these 4 payments which is getting hit here, this is for your raw material consumption. Okay, this is for your raw material consumption. So we have a specific account that is a raw material consumption account for the subcontracting. This specific GL has been created. So this account is getting hit, and the inventory which is reducing, that inventory account for the raw material is getting hit. So these two are linked to one raw material. Let me try to use another color. These two accounts is linked with the one raw material hitting. And these two accounts hits for the another raw material. It's a very common question which can be asked in the interviews when you have a subcontracting process. What are the different accounts get hit in the subcontracting process? So you need to explain that 3 activities happens. The raw materials are consuming. So raw material accounts, inventory accounts will get hit, and the subcontracting consumption accounts will get hit. Okay. Finished good inventory is increasing. So your finished good inventory and the cost of goods sold account will hit. And because we are taking our services from the subcontracting, our GRIR account will hit, and we have a specific account for the subcontracting services. That GL account will hit. You should know from where this account will come. All these accounts will come from your finance team. Okay, FICO teams tells you that what accounts need to be hit for what purpose. And we already had the last session done on last Saturday, account determination, last Sunday, sorry, done by Kunal, right? That explain what configurations we need to do with the help of FICO team so that our account determination can get hit correctly. But these are the entries which hit in the subcontracting. That's why this question is asked very commonly, because normally in POGR we have 2 accounting entries. Here we have multiple accounting entries. So you need to understand why multiple accounting entries are coming here into the picture. So this is a quick explanation on the different GL accounts which will get hitted when we do the GR against the subcon PO.